Hey everyone, just a quick heads up. This episode is best experienced on a computer. We'll be sharing our screen and walking through some live examples using the Sling software. So you'll get the most value by watching along visually. If you're listening on audio, no worries. We'll do our best to describe what we're doing. But for the full experience, definitely check it out on YouTube or your desktop browser. Let's dive in. What's going on, guys? How's your espresso, David?
Delicious. It's exactly what I needed where it's almost 5 o'clock.
It's almost 11 o'clock where I'm at, but yeah, espresso is not what I need right now.
I think you need a triple espresso, a nice triple espresso macchiato, maybe a nice croissant, maybe a nice little tart.
Triple espresso, that's gonna drill a hole in your stomach. Wow.
It's probably why my stomach doesn't like me. I had to guess. What's the alternative, huh?
One of the many reasons.
We can't say it, but there are.
Being 20 years, how long? 10 years on Wall Street, can do it for you.
Yeah, exactly. Nothing bothers you anymore. I can fall asleep right after an espresso these days.
Not me. I cannot drink caffeine probably 12 hours before I go to bed.
12 hours? That's you've barely woken up at that 12 hours.
No, I usually don't drink caffeine after 12 p.m.
Well, that's what they say, though. They say that's what they say, right? I mean, when you
it really affects me, and it really changes. And tracking my sleep, I can actually see the difference.
Mm-hmm.
So I'll drink, like during the day, I'll drink matcha.
Matcha or mate?
Mate I drink but also mate. I don't drink like after 1 p.m. I don't drink mate. But matcha I can drink like in the afternoon, no problem.
But it tastes awful.
It's good. But since we don't promote any matcha companies or any mate company or any espresso company,
not yet.
I suggest
not yet. I'm sure we can find one that's in a public vehicle that we can start promoting.
We can work with what's his name?
You remember
Bernard?
But do you remember the coffee company back in the day?
Yes,
Mr.
Rico. Yes, I still have an invite from him on like a follow request from him on my Instagram. I haven't approved it yet. Rico, what's his Rico? Yeah.
It was a Cuban. Yeah, it was a Cuban coffee company out of here, and they were in a public vehicle. They were trying to raise money and rob Peter to pay Paul, and thankfully we had some sort of a David Sling at the time. It wasn't the full version of what it's like today, but it definitely helped us when we needed it back then. It was a good. It was a good no. I think it was like probably one of the first no's. I'm learning a lot about myself, guys. I need to say no a lot more.
100%.
100%. I think that's my goal for the next year, and then we'll see how that works as it relates to the investing side of what we do.
So so today, Paolo, you prepared for us some due diligence process on how to walk to a company, how do we find out information, what information are we looking for in order to make an investment decision. It's related to what we spoke earlier with Havana Cafe. We did our own due diligence back at the time. I think it was back in 2020. I remember I was in Tulum, like December 2020, when the whole thing kind of like with Ali. Yeah, I remember that. I remember that time. Yeah. So in order to avoid all the mistakes that we did, that's why we're here. And after we hired Paolo, we made way less mistakes back at the time. So once Paolo joined our team, we're making less of those errors.
Hey, making errors, it's fine as long as you learn from them. If not, then what's the point, right?
Exactly. Making new mistakes every day.
Yeah.
That's it.
Just don't repeat old mistakes. You can make new,
100%.
but not always.
For sure. So, Paulito, walk us through.
I'll walk you guys through it. And just before we start, I want to make something clear to everyone. Due diligence it's a very interesting topic. Everyone does it. Everything in life requires due diligence. Even if you go to your partner, if you're getting married, you have to do some due diligence with that. Everything, everywhere. When you're moving into a new apartment, when you're moving to a new city. My point with this is that the due diligence and what you need for it to be considered a good due diligence, it really depends on the use case. What are you going to use it for? If you are an equity investor, it's one type of due diligence. If you're a debt investor, then it's another type of due diligence. If you're specialized on distressed assets, then it's a whole nother one. So we're going to show you here how we do it, but that's tailored to what we need to see. What you want to see or what you need to see might be different. So feel free to play around, look for new information, new sources. Maybe the same data point can give you and everyone else out there a different conclusion, right? So don't take what we say for granted as a Bible, as a must have, always tailor it to what you need. But either way, we're going to walk you through how we do it, our process. All right. So for today, guys, I brought you this company.
Can't wait.
I'm excited.
It's this company. Click. And you
Okay,
asked me how I found it. I went into Investors Hub. I went to the popular boards and I found it. I thought it was interesting. I thought it was juicy, so I picked it. There's nothing. I literally know nothing about this company.
What are they? So what are they saying? What are they saying about Quick on the Investors Hub?
Those boards are funny because it's people always saying that it's gonna go to the moon. People saying that it's not. That they reported good numbers. That the numbers were not good enough. So
can you open Investor Hub and show us? Like, I'm curious.
Sounds like it's the guy that bought stock and he's looking to sell it to somebody else.
You know what? That's
Exactly.
something. That's another thing that we were gonna talk about right now. Actually,
Quick.
yeah. So talking about a reverse split, which it's a good point.
Oh, that's going effective tomorrow?
The
Yeah.
26th. Yeah.
Yeah.
1 to
That's
40
good.
reverse
The
split.
second thing's talking about an SEC charging 5 individuals and 3 entities with
So that's a good signal to begin with.
Okay.
But that's from December 2024. That's
Yeah, this
very
is all
old.
from 2024. Where's the?
Yeah.
Yeah, but this one's from today.
Right.
And back in 2024, they were going to the gray sheets or to the expert markets back in the day, and then it's a pump and dump, and so.
Why did this come up on Investors Hub?
Honestly, I don't know. I don't know why it decided to come up that day.
Was it on the top trading day? Was it on?
I think it was on the most.
What's the liquidity like? Oh, you know what? Let's walk us through. I'm sure we're gonna get to a liquidity.
We're already jumping into the way that we do the diligence.
Let's take it back for beginners. Let's start from the top. All right. So
I love how we all get excited.
Yeah, it's like our minds are always racing. Like we're just diving into everything.
But it's always like, let's find how this shit is fraud. It's always coming in there with like a negative. Something's not right. Something's wrong here. Let's dig it out. Let's figure it out. Couldn't tell you last time I came into somebody and said, "Oh, let's find the good here."
And by the way, we should prepare like a PDF checklist for due diligence to give the listeners. So one of the notes that we need for this episode.
Definitely,
it's a great idea.
Good idea. A checklist for them to go through. Okay, so let's start from the beginning, right? So the company, Quick. How you came to know about the company doesn't really matter. But here's where we start. All right. So the first thing that's I think every investor should know is what the company does. These day and ages, there's a lot of companies doing a lot of different things. Whether it's biotech, whether it's machine learning, big data, quantum computing, crypto, a lot of companies doing a lot of stuff, crazy stuff. So the first thing to know is what the company is actually doing. I think that's the first step. And it's the first step for multiple reasons. So Maybe you think the company is in an industry that's going to disappear, for example, or it's in an industry that it's only going to grow, or it's in an industry that you don't like. There's a lot of funds out there, big funds, that invest in what's called value and like values and impersonal values. So they might not want to invest in companies involved with war or vices, alcohol, gambling, smoking, whatever. If you're that type of investor, then you need to know what the company does before actually investing. All right. So how do you know? How do you figure that out? So there's a lot of different places. Luckily enough, this company is an OTC company. And the thing about OTC companies is that over here on the OTC Markets website, there's a lot of information available for investors. So if we go right here to the company profile, we're going to see the business description. All right. So we can see that the company is a software as a service company developed to connect sellers with buyers. So it's a marketplace company. What they sell, we don't know yet, but we know that it's a marketplace company. So that's where we can start. Another place that you can find more information, if you go to the filings, here we're on the sec.gov website looking for quick click, as you can see here. Usually, I wouldn't go with the 10Qs. I would stick to the 10Ks. So when you click the 10K, right at the top, there should be a part over here where it says business. And so here you can get a description. It's pretty much the same. The company commenced business operations to allow sellers to make products or services on their platform. So it's a marketplace like we saw on the description in the OTC markets, and you can have a lot of information that we're going to go through in a minute. But first of all, we need to see what they do. Okay. So now what we like to do is look at the stock price. It doesn't hurt. At the end of the day, we're all looking to buy low and sell high. So it's good to know where the stock is right now. So you can see that the stock is, straight in at 5 cents, a little bit over 5 cents.
And that's before they did the reverse split, right? That's before the reverse split is coming in effective tomorrow. So the stock is going to be 5 cents times 40, right? So it's going to be 80 cents.
Yeah.
No, yeah. 50. No,
Just
5.
Staying on the topic of what the company does, I think a valuable point here would also be to just go on their website real quick. Can I see if the website's still even working?
That's a very good point, actually. At least my criteria, especially when dealing with over-the-counter stocks, if the website is bad, I immediately think it's fraud.
And you see that their email is not even with their domain. So look at the email. The email is quick01@outlook.com. It's not even with the domain quick.com.
I wouldn't take this, so seriously, but it's a good point. I think we mentioned it in last week's episode. Research and investing is pretty much a mosaic. It's comprised of various little pieces that make up the whole mosaic. So you have to take every single piece that you can find in order to build that mosaic. So we can take this as a little bit as a piece of that mosaic. The email, it looks off. It looks off. It's not professional. Usually companies have their own domain. So we could be sending an email to this email address and not knowing who's actually getting it. All right. So I personally, I don't take it so seriously, in part because we're not out there emailing companies left and right. So whether the email here is correct or not, we don't really care. But it is important that you know. And if that's a piece of information that's valuable to you, then collect it, keep it, and use it for further analysis. Okay. But let's go to the website. And like I said, if the website doesn't work, I immediately take it as a scam.
Mm-hmm.
I don't know why. It's 2025. Companies need to put resources in their web presence, social media, websites, apps, platforms. So if a company doesn't have its website somewhat good, it's a red flag for me to begin with. All right. So well, look, it looks good. I don't know what you guys think. I think it looks all right. So if we can see again, it's the same thing that we've been seeing in the OTC Markets website and in the 10K filing.
Can you scroll down a little bit?
Yeah.
Just scroll through it, just to skim through, just to see kind of how it flows.
Yeah, look, it's like a marketplace situation for
influencers.
sellers.
Quick click. Like when you think of quick click, you're thinking about what? Like media buying? You're thinking about affiliate marketing? What do you really think about? So it's interesting. Pay per clicks.
Let's look at the solutions. Let's look at the software. If it even takes me somewhere.
I think you need to choose one of those.
Yeah. But they have a lot of things, promo codes, custom share links, URLs, deals. So it's pretty much like, if I had to guess, seems to be like a vendor platform.
Interesting. Can you click on a couple of things that I would probably click on is who are the partners? I would kind of like to understand what kind of people they work with, if they give us any kind of case studies on some of them.
Whether you're an agency, an influencer, an investor, just someone who knows someone that has a company, we have a problem. Okay, so what is this?
Yeah, I already see that the website has been done like in a very, very low budget. You can see that the bottoms are not in the right place. You can see that there is, the spaces are not in the right place. It's not optimized for every browser. So there is a lot of issues that I find with the website, but that's a different story. I mean, it is a different story, but it's the same story, just because it's all related, right?
Mm-hmm.
Yeah.
Can you click on investor relations? Since I think that's probably where we can kind of see how they do on that front.
That's a good point. Not every company has an investor relations portal to begin with. Some companies have it, but it's way out of date. Like I've seen companies that have press releases from 3 years ago, and they're not current. They're not current.
Let's see. Yeah, let's see when their last one was.
Okay, so it's interesting. So let's see press releases.
2024.
2024.
Over a year ago.
Events and presentations, nothing. Corporate governance. It's actually interesting. It says that it has a corporate governance, but they don't say who it is.
How about financials? Is there XBRL coming through? Nope.
Yeah, but let's see if the company's
not since 2024.
Over here it is 2025. So on they are filing, they're just not updating their
So it looks like they're not updating this website.
Yeah, they're not updating this website. So I would take now, after we've seen this, I would take everything that I see on the website with a grain of salt, because it's not up to date. The stock information. This probably works because it's a plugin. Honestly, I don't want to click this.
Why
so
not?
the FAQ on the IR you can send, but it's not up to date. We know that. So we have to take it with a grain of salt. Anything that we see here, press releases, presentations, even going back to the main landing page, we cannot say that the company is updating the website, so we can't take anything for granted. Okay, but we know that they are current, that they still continue in business, because the filings are as of the latest reporting period, which was March 31st. So let's keep looking. All right, so we just looked at the website. We see that it's somewhat fleshed out. It's not up to date. It's just one piece of the puzzle. Okay, so now what we usually like to do is look at the liquidity. Is the stock liquid? Is it trading? Is it not trading? How fast can you get into the stock?
Do you care about the liquidity before you go through the like the latest filing just to see kind of what assets they might have, what kind of revenues if they have any, what kind of liabilities, or you like to jump right into the liquidity, Paulo?
For my purposes, and this goes back to what I said in the beginning, for my purposes, I do. Because I know that the liquidity, at least for me and for us, it's important. It's the difference between making money and losing money, but it's very crucial. So if I see that there's no liquidity and it usually happens on OTC stocks that literally it doesn't trade a single share, then I know immediately it's a zero, or at least I like the mosaic reference because I see, okay, the liquidity is zero. If there's something that in the filings, in the quarterlies or in the annuals doesn't quite look right, I know that it's a pass. I know that I'm not gonna waste my time because this is time. Of course, this is effort. This is time that I could be doing other things. So if the liquidity is not there and something's a little bit off on the financials, then I just immediately skip it. I'm not gonna waste my time. And on the other hand, if the liquidity is really good, really, really good, and I see that the filings are not as good, the financials are not as good, then maybe I can overlook that. Maybe I can overlook the financials because at least in my mind, the liquidity kind of compensates for the other thing. So
it all depends of what type of investor you are and what exactly are you looking for, right? Because if you have the liquidity, then obviously, yeah, if you're a trader, the liquidity is the most important thing for you. But if you're a very long-term investor, then the liquidity right now, it's not necessarily what you're looking for. So it really depends on your end goal.
Correct. And
exactly.
it's not that you're looking at one, not the other. It's just how do you tackle it is the question, right? And what's best for you?
Correct.
Because, Paulo could go there and say, this thing doesn't trade. I don't even want to look at the fundamentals, right? It's not for me. I don't want to buy $10,000 worth of shares in the market and take the stock to 30 cents. Why am I going to do that if there's no liquidity? And that's why he's using the Sling to be able to actually see the liquidity and really understand how it's been for the last, 12 months, 6 months, however it is. And if that turns to be something that's worthwhile for you, then maybe you do care about it a little bit to understand what do the fundamentals have to say.
Yeah, that's a good point. And I always look at the fundamentals. It's just a matter of time and effort, right? So I see if the liquidity is not there, I might just brush through them, might take a quick 5 to 10 minute look at the financials, and that's it. If I see the liquidity, and it doesn't have to be a very liquid stock, like I'm not looking for millions of dollars traded a day. I'm just looking for some type of liquidity. If if a bit of liquidity is there, then I'll take maybe 30, 40, maybe an hour looking into the financials, trying to understand.
Just
We
looking.
already did. We did a great episode about liquidity. So I think the people, who are more interested, they can definitely go back and look at that. Like that talks a lot about the different things. For us, as the type of investments we are looking for, the liquidity is a very important thing for us, especially when
We're
you're looking at
using we're
small cap companies.
using the Sling to be able to create a procedure for us to be able to say no as quick and efficient as possible. Yeah.
Exactly.
So let's go back to March. So let's do March, well, 3rd, since it's a weekend up to today. So June 25th. All right. So let's look at the daily. Now let's look at the weekly. We don't want to go too granular.
Yeah.
Look, it looks good, but you have to notice that it's on a weekly basis. It traded $5,000 worth of shares, and on the week starting on June 15, it traded $200. So it's
Yeah.
not a very liquid stock.
Not consistent. And tomorrow they're doing a reverse split. So basically the stock gonna go up to $2. And from what we know, most of the time a company that does a reverse split, that's not a good sign.
Well, you
Yeah,
said it's a 40. They're doing a 40-1.
40
yeah.
to 1. So the
How
stock
many
gonna be
shares?
$2 tomorrow.
How many shares outstanding do they have?
Let's see. Let's take a look. So as of June 13, they have 155 million shares. So that's gonna be pretty much 3.9 million after the split.
3.9?
Yeah. After the 1 for 40.
The
Let me
flow
check.
is very low though. Like most of the unrestricted is it's only 25 million unrestricted shares.
Interesting.
Yeah. But that's a good point. So, okay, we looked at the liquidity and we can go as granular, we can go daily if we wanted to. Let's see. I don't imagine it's gonna look very good. So you can see, it's not looking really good. $40 traded. That's not something that I want to get involved. At least the VWAP is kind of stable, but it makes sense because it doesn't even really trade. The price is not fluctuating. It doesn't trade, of course. Um, so, okay, after I see this for our purposes, I know that there's probably not a company that we want to get involved with. Just
You could also go on with the question with the outstanding or whatnot. You could go to diluted and you can add them. Maybe show the guys you could just add them into here as a company, and you'll be able to get the outstanding shares, and now you'll be able to track what happens here.
yeah, let's add it, and then we can see
155 million shares, just like what we just said, right?
Yeah, like
Mhm.
we just added it, and it's going to change with the outstanding change with the reverse split, of course. But we're also going to know if they do any issuances of shares. Again, you can go back to why it is important to keep track of these things, but we do. It's important. I think we spoke nonstop about it on that episode. So feel free to go back and watch it, study it. It's another piece of the puzzle, of course.
I'm very intrigued, to be quite honest with you guys on this thing. Yeah, I'm not a big fan of the website, and it looks like somebody just kind of, mosaically put it together, very nicely to go pieces, this and that, and that's that. But I am intrigued for the fact that it's a 5 cent stock today. It's not a 000 stock today. They did go through a whole corporate change, meaning like a reverse stock split, to do a 40-to-1, to bring it to $2, to bring it to 3 million shares outstanding from the 150. They have a plan. Something's there. I
They
don't
have
have
a plan
enough opinion.
because they're spending the money, like right, like
They're
everything you just
they're
talked
not
about costs money, right?
they're not horrible today, right? We've seen so many worse, typically speaking, right? So I'm just trying to understand what's fueling them to what don't we know, right? Something's missing here. So, and we haven't gone through the whole thing yet, right? Because now I am intrigued to look at some of the fundamentals, maybe to see what the latest couple of Ks or Qs or AKs, who are maybe a little bit of research on the management team, who are the operators, who are some of the biggest shareholders, because something is being done here. I just don't know
And
why.
from our experience, the things that are getting done are not being done for nothing because they are expensive and they're costing the money companies. So there is some sort of preparation. Adon is right. I see it too. There is some sort of preparation for something else, maybe a merge, maybe they're trying to buy something, maybe they're trying to bring a different asset into the company. And that's why they're doing everything, because once it's going to get done, liquidity might come back, and the whole situation will change. So it's important to keep that in mind. Not to say that it's necessarily it's going to happen, but Elon is right. There is a different angle here.
And guys, this is beautiful. As you guys can see, that's kind of what goes through our minds when we're looking at companies. We don't just say, the best way to learn is to ask questions, whether to ask questions to somebody or just ask them to yourself. Right now, we're just asking questions to ourselves. Okay, right. The liquidity is not there. The website is old. It's not updated, but they're doing a corporate action. Why? Why are they doing a corporate action? Who's involved? Why are they doing it? Maybe they have some plans in the future. So then, with all of those questions that you guys just mentioned, you write them down and you go through them. You go to the filings and you start to answer those questions. Okay, maybe they're doing something. Maybe when we look at the 10K, we're going to see who's involved in the company, who are the majority shareholders, who are the directors, if they have any plans. Maybe they have an 8K that is going to give us more light on what's happening. So this is great. These are all of the questions that you need to be asking yourselves at the moment of a due diligence, right? But I guess to continue, the way we answer those questions that you guys have that are great in my opinion is to go into the filings. Maybe there's more light there. Okay. So right now, since it's an OTC traded company, there's a lot of places that we can see the filings. You can go over here to disclosure and you're going to see, first of all of the OTC required filings, that these are not so important right now, and the SEC filings, which are important. You can see it over here, or you can go, as we mentioned, to the sec.gov website and look at them. I prefer the sec.gov. I think it's easier to navigate. I think it's clearer. Whatever you guys choose, it's fine. Just know that there are various options. All right. So we already looked at the 10K. That's fine. But let's look at the 10Q. And the 10Q, because the 10Q is the latest reporting quarter. So it's March 31st. Remember that while filings are important, they have some limitations. And one of the limitations is that it's always backdated, right? It's always a look in the past. As you can see, the filing was filed on May 15 when the quarter was ended on March 31st. So you already have a delay of how many days have happened since the quarter ended. So it's always backdated. You're always looking back. So what happened in March 31st may have changed between March 31st and May 15th. We don't know. But let's look. Either way, it's the only piece of information that we have with companies. So it's important to look. Okay. So again, this is all pretty much standard, the name of the company, the state of incorporation. It's important to know the state of incorporation, mainly because of corporate actions. If the company needs to make a change, if the company wants to do a reverse split, if they want to do a name change, if they want to approve compensation for officers, different states have different requirements. I'm not sure if you guys are aware, but a couple of months ago, Elon Musk was in a legal battle because the state of, I don't even know if it was Delaware, Nevada, wherever.
It was Delaware, yeah.
Yeah, so the state of Delaware wanted to block his stock compensation.
Really? No.
And so he wanted to
block
move.
it. It actually blocked, but then they did a vote. They did a proxy vote with the shareholders, and everyone voted to give him his package. So it was a big thing, and it was the state of Delaware.
Yeah, and so Elon Musk wanted to change the state of incorporation to Texas because Texas doesn't require or doesn't have the permission to block those type of transactions. So in some cases, that's a rare case. It's not common, but it's important to know. And so you're gonna have a lot of information. The executive offices over here, if they have a website. A phone number, although I would advise against calling this number. It's not go ahead and call us every time. So, but it's important to know, right? You have it over here.
I'm tempted to call them right now while we're on this right now.
We're gonna
very tempted.
Let's do it.
It could be a good idea to see if the phones are still up. If they're not, then maybe I wouldn't invest in it. So what do you say? We're gonna call them?
I would. Let's do it.
You wanna go at it?
All right,
Yes.
David, call them.
Just a quick reminder, the information in this podcast is for educational and entertainment purpose only. Nothing shared here should be considered financial or legal or investment advice. Please do your own research or consult a professional before making any financial decisions. Love you guys.